The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman on this 5th day of July. My pleasure to be here. Hope everyone had a good 4th. And very interesting. We're looking at a Dow which is down over 70 points, now down only 16, holding the 9-period moving average, tested it exactly. Big question is going to be, you see this chart on the left? Will the MACD eventually cross positive and see the Dow in the 22,000s, 21,800 or higher? And the stochastic go from 56 back to 82%, or before then, are we looking at least a sideways consolidation with this candle low of 21,197 made just 4 days ago, right there on the 29th? Will that low be tested? So, within the context of chart formations, have a look at this. You see this is Chapman wave falling axe formation. And we've gone, this is this declining line, a much sharper declining, so it's lower highs, but much lower lows, and then it tries to bounce. A break and a close above the trend line. Let me make this much bigger so you can see it, because this is the daily chart right here, weekly chart right there with a rising wedge formation. And there it is, monthly chart in leg E, still just one. Basically, you've had since, since January, February of last year, you've had a couple of tiny little doji candles red, tiny ones, and one big red one, which is 4 months, that was that February, that was in March, and mostly green candles. So it's just been a persistent upward with a good MACD, good stochastic, not so good in the weekly chart, except I want to check right now, 449, 465, 449, 446, 461, is that right? Is that the first time that we're looking at the weekly chart? Let me expand this. I need to get this right. No, the MACD has not yet turned positive. It's very close. All right. Whew. It's going to be very interesting. So let me put it this way, that the Dow and the New York Stock Exchange, and that's the very broad, over 2,000 very important stocks in the New York Stock Exchange, made new highs. Made new highs on Monday. I keep thinking it was Friday, but actually it was a Monday. And on Monday, the new high didn't see a close above the previous high. That was the high of the 29th. The high of the 29th was 11,837.60, and the close on Monday was 11,835.72. Yeah, just a little bit below. So a couple of things are really important. When we're looking at the different indices, New York Stock Exchange did pull back sharply today. It hit exactly the 9-period exponential moving average, and then it pushed higher. Look at that. And the weekly chart candle, that long-legged candle from last week, we've gone above that because of Monday's action, and that is important. But a close above this high would be very important. And what's really important about this whole thing is that the monthly is still in a leg D. When we get to D's and E's in monthly charts, that's where I kind of get a little bit nervous. All right, so a little bit nervous says, all right, keep looking at the different indices. Let's go to the QQQ. QQQ, nice bounce today, calling it a bounce of 92 cents at 137.11. You would think that the MACD still very negative, that there'll be further downside to go, unless there's a spectacular move that takes the Power Shares QQQ Trust Series, NDX 100 trading vehicle, above the 9-period moving average of 138.26. I would even have to say it's going to get quite a bit above the candle of is that Monday? Yeah, the candle of Monday that had a high of 138.43. And then I'm going to be looking at it and say, you know what? A bounce before we retest? Well, we'll see. The SMHs Can't do anything. Up 86 cents at 81.78. Still looking very poor for subscribers. We've been short for a while, quite a while. And we're looking at the semiconductors having led the market on the way up and basically leading on the way down the QQQ series and the XLK. What is the XLK? It's the S&P Spider Select Technical Tech Sector Spider Fund. Having a nice inside day today, up 36 cents at 54.70, but it's gone to a leg C. I think it's still going to go to a leg D. It did do a left side, right side price time match. I meant to mention that to subscribers over the weekend that we were watching there. See the left side, right side time price match in an arch formation, but look how poor the technicals are. The on-balance volume and the stochastics say, hey, there could be a bounce, and the bounce could go to 55.11, the 9-period exponential moving average. If it closes sharply above that in the next 2 days, I'll say, oh, okay, that's good action. That is very good action, but so far, not good action. So XLF, I want to do that. Questions about it, I'll do it right now because we always get questions on the many emails that I get. This is a leg F. I'm calling it an F for now, but there could be an alternate count. The XLF is the S&P Spider Financial Fund. The way it's looking with the MACD is still pretty good and the stochastic improving. I think that there's a chance. What was the low today? The low today was 24.92, and the high on Monday was 25.90. We'll watch this closely. Any move above that 25.19 is a big positive, and I would have to probably rename it and say, yep, we're going to be going higher. So XLF acting very well, not great, but very well. The weekly chart is acting great considering that it's got the cup formation. 25.30 would be my upside target in this in July. So let's go on. I want to look at crude oil. Crude oil right now is pulling back sharply. It's down $1.78. One of the things that I always look at when I see a concerted effort of 1, 2, 3, 4, 5, 6, 7, 8, 9 green candles closing above a very important left side high. In this case, crude oil continues closed above the 46.93 high of the 12th of June. It did that twice. It did that on Friday and then again on Monday with the doji candle. And that doji candle said, hey, go to your 120-minute chart and do a notation there because that's going to be important. I did it on something else, but I didn't do it. I forgot to do it on the crude oil. So this will be A, B, C, D, recycles A, B, C. Yeah, I did a D. So it made a D top and now it's pulled back. Now, the question I have, and I'm pretty sure I'm going to get from others as well, from my usual crude oil questioners, is, was that it? And my answer is, it was very good. I was thinking that if there was a mild pullback and then a leg B to the upside, I'm going to just have to say crude oil's made at least a short, not yet an intermediate-term low, but a short-term low. At this point, I don't even know if I can call it more than a near-term low because this is a very sharp pullback. You know, the forces in the crude oil are so different to what they used to be maybe 10 years ago, 20 years ago, 30 years ago. There are so many diverse forces. There are natural forces, which is like natural gas and America's interest in actually producing and creating a monetary effect from our oil resources and natural gas resources. That's impacting the oil markets, as well as the conflagration that goes on between the different groups, the oil producers. I'll be back. Basil Chapman. Dow's down 11. S&P's now up 2.5. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. So Mike in Littleton had asked me, I think on Friday, I'm sure it was Mike, had asked me, I can't even remember if it was last week, I think, about KTOS. And I said I'd do some work on it, and I did over the weekend, and then we didn't talk about it on Monday. I was waiting for the leg D. It did go to the leg D, made a peak D, and it's pulled back. And what I'd said is I'm anticipating that it's going to pull back, and I'm doing this a couple of days later. I've done a lot of charts since then. But I believe I said I'm expecting a pullback based on the MACD and stochastic not being as strong. And if I'm correct, I was looking at this doji area right here from the 16th of June with a high of 1094 and a low of 1066. Well, today it dropped down to 1095, and now it's acting very well. It's unchanged at 1157. So I'm not sure if you are in it. What do you actually say? Basil, can you look at KTOS? Okay, so now what I'm looking at is the MACD and stochastic are still quite weak. I'm surprised that it's acted so strongly today, having been down so low. I like that kind of action. It's saying, hey, like a cork in water, you're not going to keep me down there long. I keep wanting to bob to the upside. Then I did the weekly chart. I got a peak F initially back in, that was in March, I believe it was, had a pretty sharp pull back from just over 9 to under, well, it hit 7. And then it ran very sharply, pulled back, and it went to high highs. It went to peak ABC. This is now leg D. If all of this week it doesn't go above 1234, it's going to be a peak D. But the MACD is still strong. Stochastic is holding at 90.95. That's very good. Relative strength is pulling back, but it's okay. And then the monthly chart is in D. So I had 3 Ds, daily, weekly, and a leg D in the monthly. My thinking is, and now Kratos Defense and Security. I meant to have a look to find out exactly what they did, but my thinking was that whatever they're doing in this particular market, it's been very favorable. And you can see even today it came back from being weak. So here's what I'm looking at. I suspect you've been watching it. Let me just, I don't know if you can type it in right now, Mike. If you can tell me, are you in it at all? It'll help me a little bit to know what the stance is. My thinking, if I was looking at it fresh, and I remember saying, hey, it's on my list. And it was on my list, except I've got a big list. I never got to it. And I wouldn't have put in a buy at all this morning at 11. I would have been waiting for 1080 to 1070 to say, hey, that's where I'm prepared to start looking at it. But I love the action, KTOS right now. And I'm looking for an entry point. So this is what I'm going to say to you. How about I don't know your trading style. But since this is something you've been looking at for a while, if it was at the low of the day, I would have said wait. But it's now almost at the high of the day. It's as if it just refuses to at least even consolidate more than just briefly. I'm going to suggest that you start a position. This is not your real position. This is just a starter position. If you're going to buy 100 shares, I would start with 20 right now. Right now at 1162. But you've got to say to yourself, this is a stock that if at any point this week it starts to trade anywhere under $11.30, it's going to be coming back. So if you're prepared to give it an 80 cents to a dollar flexibility, I'm going to suggest to you, start your position here, but don't get carried away. Just start it and say, you know what? Even if it goes up from here, I'm willing to bet that over a period of 3 to 4 weeks, it'll be back at 1161, 1130 to do some testing. So this is just a feeler position. If it really breaks out and goes to 1250 by Friday, that's fantastic action. Then I would even say to you, add to the position. So it's a feeler position. I say started right here at 1160. It would have been way better if I had seen it and it was not 1130. I wouldn't have said that. But if it was even 1140 or 1137, I would say, hey, that's good action. So I feel comfortable saying a starter position. This is not your real position, and let's just watch it for a few days, and it's on my list as well. D in the weekly chart with good technical says it should go very quickly to E if it's going to go to E at all, or even extend leg D. Monthly chart leg D with good and improving technical says, you know what, there's a lot of support in the mid-10s, and that's the way I would be looking at it. Entry, starter position, not the real position yet, and give it a few days and see what happens. I hope that helps you. Next question was Orly. Subscriber has it. I had it in my newsletter way back. We've had shorted it so many times, then I just gave up. We did make money, and then we saw it just break even. I said, no, let's just wait. And we did it at 285, and then the last series was at 265, small loss, 2-point loss, 268, small point, $1.20 loss back in February of this year. And then I just said, you know what, it's going down, but we don't have our position. I just kind of took it off my list. I hate it when I do that. Why take it off the list? It's O'Reilly Automotive. I did the analysis. I drew in the arch. I said it's a hat-trick top, 292.84 in July of 2016. And I said, people are buying new cars. People are not doing as much in the way of repairing as they had. The age limit of cars has gone to 11, then to 13. It's very high. I just didn't see it being viable anymore. And here it is plunging today, down 44 points, down 20%. So congratulations on still holding your short in the den. I'm just sorry that I didn't have the patience. I should have just taken 285 to 175. I'd say that's a pretty darn good move. All right. So all it's the whole group, all the AZO, AutoZone, the works. There's a problem there. And that problem is what I'm talking about. It is new cars are taking over. And now we're going to be watching what happens with those new cars, because General Motors had a very nice move on Monday, gave back some of it today. We're going to be watching that closely. Ford, same thing, giving back most of the gains of Monday, but still the weekly chart is holding okay, not great, just holding okay. And FCAU, which is Fiat Chrysler, was that right? Yeah, Fiat Chrysler, pulling back in a trading band. So let's watch those. Let's see what happens. Now, I need to do a couple of things. Just real quickly, I want you to go through this. I'll do it quickly. Here we go. INDU. The Dow, I'm holding very well, holding the 9-period moving average. New York Stock Exchange, very broad New York Stock Exchange, held the 9-period moving average and bounced. The QQQ series having a little bit better of a bounce now, up 93 cents at 137.13. The MACD is very poor. The stochastic's trying to turn around. I think it's still going to go to the teens. I mean, it's in the teens, go to the single digits, but right now it's trying to turn up, and the unbalanced volume has turned up. Let's see where that goes. IWM, holding kind of well. More, it's just a sideways move. It's down today, 94 cents at 141.16. There's a real mixed market we have here. If you're looking at, for instance, gold, GC, is now up 1.6. It was down earlier. It's trying its best to form some kind of, you see the W formation in the stochastic is quite good. The MACD is not good at all. And that's suggesting, based on the weekly chart having taken, did it take out the low of 1217.60? 1216, yes, it took it out. Oh, I have to talk about this. Basil Chapman, time conditions out. Dow's down 9, S&P's up 1.90. Mixed market. We'll be back straight after these messages.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
I just realized, because I did this show with Tommy, that I completely forgot to go through the different indices. So the E-mini is trading up only 3 right now. The Dow's down 10. S&P cash is up to $2. Oh, what a mixed market this is. But one of the things I said to subscribers this morning, I always show the daily, the weekly, and 120-minute chart before the open. And what I'd said was that the sideways consolidation could continue a little bit. 2421.25 is the low to hold. It went down, just touched 1925, and the high was this 200-period moving average to the top right here of 2431s. That's going to be important. So sideways, remember, a rectangle formation can last a lot longer than your patience. So we're watching that, and so far there hasn't been a break to the upside. I suspect that they will try, but most importantly, we're looking at how do the weaker indices have a bit of a balance here, and how does it affect the key indices like the Dow, the New York Stock Exchange, etc. So I did that. I looked at crude. And the high-grade copper, I had said, no, I didn't do it. High-grade copper is pulling back very sharply here. It's at 2.64. It's in a trading range. It hit the 200-period moving average in the weekly. Bam! Once again, it just cannot break above it at 2.71. Now it's down at 2.64 and looks like it wants to test 2.63. The 9-period exponential moving average in the weekly chart. This is going to be a very important moment. TLT. So here's what I'm thinking. The TLT at 124.41, the iShares 20-year Treasury bond ETF, has gone under the 200-period orange moving average right there. The 9-period moving average is sharply in a downslope. The MACD is, the stochastic is, this is going to be very important. How does this 200-period moving average act as support? My thinking is that we will know that the general market is starting to have all the indices, including the Dow and the New York Stock Exchange, turn down if bonds start to rally from here. And I'm thinking that if I look at the TNX.X, which is the 10-year up A, B, this is going to be very important. Does it continue into a C and a D, that's the Chapman wave methodology, or does it start to stall? Well, the MACD is good, the stochastics is 92%, and that suggests there could be a little more to go on the upside. And then if the markets start in July to turn down a little bit sharper than they were earlier on, then we will see money flow out of equities and go into the bond market. That would be the traditional way of looking at it. Okay, so I think I've done almost everything that I needed to do. Yeah, I don't think I'm missing anything right now. What I did want to look at was a question about the IYT. So that includes tracking, etc. This is a leg C, a G/C. I'm calling it a C for now because I think that's really what it is. Should have one more pop to the upside based on the MACD and stochastic. Now let me just be formal. I'm going to be calling it G/C, an alternate count. So far everything is good. The weekly chart has gone above the high of 173.88 that was made back in March. And now what we're looking at is we've gone to the 174 level, and the MACD is crossed positive and the stochastics at 90%. The 120-minute chart suggests we're a little bit toppy short term. I suspect that we've gone already to a leg D in the monthly. You see how everything's lining up to say to me, just you're going to have to start being a little careful now on the long positions, except for isolated cases. And that's based on what we're looking at here in monthly charts. Now I want to do this. I'm going to just skip all the questions that I've got for the moment. Let me show you. Dow, because I will not be here tomorrow, and possibly, I'm not sure, I'm going to try to be here Friday. I won't know until Thursday whether I am, and I'll let my subscribers know. But at this point, let's just imagine that I'm not here Friday. I don't know. The monthly chart is in leg E in the Dow. D is where I start to get a little cautious. The S&P is, what is the S&P? It's in leg D, right there. Let me just open that up a little bit. There, now you can see it. Leg D and no new high so far this month. The QQQ series in leg C, and probably a peak C if there's no new high this month. I don't think there's going to be a high this month. The SMH is very important, semiconductor index in leg C. That means looking out the NASDAQ and the Qs, the Qs and the semiconductor index And the XLK, which is also in leg C, there are ways that I might be able to count that as a phantom peak back in August. I think it was July, September, October. But at this point, I'm just counting them as C and saying it's looking very bullish, looking out later in the year. But right now, they're starting to see some weakness based on the weekly charts. If I'm looking at, so I want to do the monthly charts, IWM, what do I get there? I get a leg D, possibly a peak D, but it's holding pretty well so far. It's bumped into the Chapman Wave inside track repellent zone. We're going to watch this real closely. It hasn't gone, it's got a gray B here, hasn't gone to 143, which would be 142.91, which would be a new high. It hasn't done that yet. So you can see that we're looking at XLV. I just want to do a few things that we're acting well. XLV is pulled back from its peak E and then a doji, silent doji. That says to me, watch out, could be a consolidation. No sell mode in the daily, but no sell signal even in the weekly. So this is holding, but it's leg D in the monthly. This is the S&P Healthcare Spider Fund. So as I'm doing this, you can see what I'm looking at. I don't remember I did this, I don't know if I did in this show. I know I did in Tommy's show. Anyway, the Nadex bull bear, but right now I'm going to do this. The XLF is holding well at 25.06. It needs 25.20 to start a new leg up or to continue this leg up if it's today. But the weekly chart says, hey, nice action. Not great, but no, it's very good action. But it'll be great if it can break into the 25.30s and hold anytime in the next 3 to 5 sessions. All right? Monthly chart is a peak D, hasn't gone to a peak E yet. So you can see as I'm putting this all together, the VIX index, look at this. The VIX index now at 1153. Still a green candle, still holding the 9-period moving average. At the end of the day, if the VIX is below 1130, it says, oh, it's that same old thing. It rallies a couple of days and then it fails. If the VIX is anywhere above 1158 at the close, it's suggesting the VIX is in play. So it hit 15.16 the other day, last week. I don't know why it actually went that high, but it did. Trump healthcare, whatever we look at here, I'm going to have to put Trump something. Trump Comey, Trump healthcare. Let's see what the Trump thing is next. That's just the way it is in the market. 1158 right now, 1151 I've got maybe a little ahead of me or behind me. But yeah, I'm looking at this and I'm suggesting to you that you got to keep... If the VIX index is holding like this, it says that money is going into the volatility index, not just as a insurance, but as a trade. That's kind of, I like to differentiate between going there as a position play or going there as insurance. I think we saw the insurance for the last 4 or 5 sessions. I think if it goes into the 11, certainly if it goes into the 1160s later today, I think that's going to be a play, not just insurance. I'll be back. So what did I say? The IYT is acting well. We've got a couple of questions. We'll go quite a few questions. We'll be right back. Basil Chapman, Tiger Conditions Hour. Dow's down 12, S&P's up 1. We'll be right back after these important messages.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Will interest rates continue to rise? For bold trades on U.S. Treasuries, now may be time to take a closer look. Trade TMF or TMV. Directions daily, 20-plus year, bull and bear, 3 times ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, everyone, we're back. So, question of the den was, Basil, do you think Moz and pot at bottom? So, Mosaic, let me just have a look, MOS. You see, there's a problem. I do not like to see green, green, and then, bam, red. Green, green, up, bam, red. Unless there's a basing process going on. And in Mosaic, trading at 23.13 down 64 cents, there was a great candle on Monday. And Friday was kind of good. But unless it's a stair-step move. Now, the MACD is strong. Stochastic's improving. I don't know why it got slammed as it did today, down 2.7%. When I'm looking at the weekly chart, if on the week there's a close above 23.60, I'm going to turn around and say, wow, I think for the first time I'm looking at least a short-term rally. Might turn into intermediate, but a short term. In fact, over the weekend, I'm saying to myself, are the commodities really TRCCI? Are the commodities trying to tell me something here? There was a sharp move up last week in some of the commodities, certainly in the index. The weekly charts made a V-shaped pattern. It snuck above the high of the 16th of 405.93. Yeah, on Monday it went to 406.42, just a hair above. Didn't close above, but it was good. Oh, no, it did on the weekly chart, that is. So it's improving the monthly chart if you don't make a full arch formation. So what I'm thinking is, and the reason why I want to look at it is Alcoa had a very nice session. But then I looked at the steels, and they're struggling. USX X is a symbol, trading down 19 cents at 22.21, made a peak D. SCHW, no, that's Charles Schwab. Oh, nice chart. SCHN, no, that's Shine. Oh, yeah, Schnitzer. That's Schnitzer. That held very well. It's one of the best, actually, Schnitzer steel. So I'm looking at really mixed pieces of the puzzle. So I didn't look at Mosaic and I didn't look at Potash, but they were kind of on my list for this week. Now I've got to it. Good question. Thank you. Very timely. And I don't like the give backs. I don't like the fact that they haven't been able to have follow through. Mosaic is stronger than Potash. They do different things. Let me just show you that what it says. You see what it says there? Lowercase h goes to a lowercase m formation. I typed that in way back. And look, there's the h going to the lowercase m. So I'm going to say, hold off let's see. You will get signs, and I believe that if those commodities, that is potash and mosaic, phosphate, is that right? If they start to move, they're actually going to move for a little while. So I'm not sure you're going to miss out anything, but keep it in mind that you need to have some follow through to the upside. You can't just have a bounce and then give it all back. Bounce, give it all back. Don't like that at all. So the next question I had is call positions on the bonds. You know, why am I not getting bonds? Oh, I changed my, maybe they're all related. Account not enabled. Okay, I did something the other day on Monday. That's why I didn't have my live charts. I did something very silly. I'll have to go back and change it again. I don't know what I did, but I'll have to go back and fix it up. I'm not getting live data, but I do have the TLT, and I do need that live data. So this is 124.44 in the TLT. I'm watching it. I'm making a big deal of it. If the TLT rallies above 125.65 and goes to 126 by Friday or Monday, what's today? Tuesday? Today's Wednesday. No, by Monday or Tuesday of next week, as the market starts to give back more gains, in other words, any bounces are given back by the end of the day going into Thursday and then Friday, I'm thinking money's going to come out. It's going to migrate, just at least, even if it's short, intermediate term, will migrate out of those areas of equity and risk and go into the safety play of bonds. I'm thinking that, but I need proof. Here's a question, XOP, Spider Oil and Gas. You see, I don't like these rallies that go up and then bam, there's a big move down, especially in the weekly chart. Cannot close above the 9-period exponential moving average. What the heck's with that? Come on. You've been above it in the weekly chart, but you just fail one. Oh, big deal. There are a couple of bars. Look at this. From that peak D high, it was made in December, the week of the 16th of 2016 at 44.97. Once it broke the 9-period moving average, it hasn't closed above 32.74 is the new 9-period moving average resistance. It has to close above there this week. It just doesn't do it. And I'm just suggesting to you, I don't really want to take a jab. There was a stock I had this morning. I put it on the list for my subscribers. It was one of those that was in my stock watch list. And it was very low priced. And I thought, great, gee, oil moves up here and helps the oil and gas and all that. This could be a real nice, and then I decided, you know what? I'm looking at too many long positions. I need to be adding more short positions. I need to be stepped back. I've got to be a little careful, and that's what we're doing. So the positions we have for long plays, I'm not sure we'll get any other. Day's young, you never know, because I put the prices, entry prices way lower. I'm watching it. Now, you get stocks like this. For instance, there's a stock that I've watched for years. I think maybe only once, maybe twice we've gone in and out briefly. Jiffy. It's Gulf Island Fabrication, metal fabrications. I missed it right here. I saw it on the 28th. I said, oh, yeah, maybe. Well, we didn't get that entry, and then it just took off from the 10, let's call it 1080s. It takes off and it goes to 12 on Friday, and $12.10. A nice move. It did everything that I wanted in the Chapman wave, left side, right side, price, time match, and all that stuff. And we missed it. And now it's pulled back. Now I don't want to try to play it for just a leg D. It's under the radar. Nobody even talks about it. Gulf Island Fabrications, steel, metal fabrications. 1140 right now, down 60, down 5% on the day. I don't know. I'm saying to myself, you know, there are a couple of these that have had their moves. We have a couple that, you know, we're in that might be doing well. But you know, it's tough stuff. This is tough stuff. So I'm going to be much more selective, even than I've been. I think the indices you can short. Individual stocks, yep, there are a couple of shorts. It's the funniest thing. I put down a stock over the weekend on Monday. I looked at it, so Monday night going into Tuesday, I'm saying, great, this is perfect. And I put it down. I got the price at 153. Perfect short. I like a higher price because, again, I can have a wide buy stop. And then I had put in the symbol incorrectly, and I couldn't, for the life of me, I have no idea. It was just a perfect stock for a short. I don't know what it's doing today because I don't know what the stock is, but everything was there. So sometimes you make a dumb error. It was just one of those silly things. So I'm going to be very careful right here. And I'm watching. Why? Because someone had mentioned there could be a bounce in, say, the semis. So semis have had a really big hit. They've gone from the 89.72 level to Friday's low of 80.92. 9 points. That's 11% for an index that only went straight up. The last big move it had was the move that was back in March, where it went from about the 80.05, where it is now, 80.1, a little higher, 80.05 level to 76 at 4, that's 5%. This move it's had. Look at that weekly, monthly chart. I think that it's going to be coming down a bit more. And that's going to impact, I believe, it should impact QQQs. So we'll be back in the final segment. Basil Chapman, Tiger Sal, very quiet week. But we'll be back, down 60.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
So a couple of questions came up. One of them is, why? Let's see. What do you think is the upside potential for the Qs? Good question. At this particular point, this candle right now in the 120-minute chart is not what you really want to see. And of course, the day's young, so we've still got another, 30 minutes or so. I'm looking at the 120-minute chart, and it needs to clear 137.36. It's trading 137.18. What, 18 cents is nothing, right? It should just jump over. And if it does, then it's looking like it wants to tackle the high of 1130 on the 3rd, and that was 138.43. However, if it closes above 138.43, then I have to say, you know what? The 200-period moving average that was support, was resistance, was support, like a sine wave up and down, is going to become a magnet of 139.31. So let's put it that way. Now, what position do we have in the opening call? We don't have a position in the NQ. We do have it in the SMHs, but not in the Qs. One of the reasons is I want you to see how this candle works, to see if there is a trough today below. If they went below 136.10, it hasn't. And the low today is 136.16. And how does it handle an inside day with the red candle of Monday? And that's going to be very important. And if there is a give back, what happens to the MACD and stochastic? Does the stochastic at 90% start to go to the 17% area, which would suggest strongly it's going to the 15s and then the 12s? Or is it going to bounce here and have the stochastic close positive above 21%? It's at 19.27 right now. And that's going to help at least try to test the 138.27, which kind of corresponds with what we were looking at a little earlier. So I'm just watching. What would I do? I'm telling the truth, I'm waiting to see if I want to short. I haven't done it yet. And one of the reasons is I think that the weekly chart has gone into a sell mode based on the MACD and the stochastic. So I don't see, after such a fantastic move, to have such a quick move to go to push back to the 140s area. At this point, I think this is just a bounce, and I'm treating it as a bounce. Hope that covered that. That was a little bit more detail than I was expecting. JP Morgan, just real quickly, you get your usual question about the banks. JP Morgan was on a tear. It's in leg E to the upside. Fabulous move in the weekly. It's going to try to test the high of the week of the 3rd of March of 93 and 98. Now, we're about to wrap up. Before we wrap up, I want to do a couple of things. One is right here. I will not be here tomorrow. I believe I will not be here tomorrow for the show. No, I won't be here for the show tomorrow. We'll be doing my opening call for subscribers. It's Friday. I just don't know. It depends on what happens tomorrow, whether I'm holding off coming back or whatever what it is. So I'll let subscribers know. But if not, it's going to be a long weekend. So the parameters to watch are real simple. If the Dow closes, no, it doesn't have to close. It just has to push. If the Dow closes above 21,480 today, that'll be a good sign. But if it makes a new recovery high this week, today, tomorrow, the next day, if it pushes, it doesn't have to close. If it pushes above 21,562.75, that is really good action for the Dow. If it pulls back in the next 3 days, today, tomorrow, the next day, it closes under 21,400. That's negative action, and that's suggesting to me, got to watch the weekly real carefully. The other indices, the New York Stock Exchange, same thing, new high would be very positive, but pulling back under the 9-period moving average again and then closing under it, that would be a negative. In the meantime, it's a mixed market. Look at each sector individually, but I believe that the SMHs, the XLK, and the QQQs are having a big digestive phase. They need it. They deserve it. They've been on a tear, and they just need time. That's all. They need time. And we'll see how we rotate and watch the XLF, see if it can hold gains, and watch the TLT. Otherwise, have a great time.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.